Hello all, in this video we are going to discuss some of the practical questions from IFRS 16. Let's get started. The first question is CR enters into a lease on 1st January 2011 for a machine with a fair value of $235,000. CR will make annual payments in arrears of $70,000 over the 4-year lease term. So here is this is a case where we make payments at the end of each year, because in the question they have clearly told that payments in arrears and the lease term is for 4 years. The rate implicit in the lease is 9%. So the implicit rate is directly given. We don't need to go for this incremental borrowing rate and all. And they're asking us to calculate the finance cost that should be recognized in the statement of profit or loss for the year ended December 31st December 2012. That is the second year of the lease. So we know that lease liability is equal to present value of future lease payments. So here the lease payment is 70,000, which is made over the 4-year lease term. So we make a payment of 70,000 at the end of each year. So 70,000 multiplied by 3.240. See, this 3.240 is the annuity factor for 4 years at 9% interest. You can either use the ordinary annuity formula to get this number, or you can also use the annuity factor table. So we get the lease liability of 2,26,800. The product of these two numbers will give the lease liability, and this is calculated at the initial measurement of lease liability. Here they're asking us the finance cost that should be recognized in the statement of profit or loss in the second year. So we should also look into the subsequent treatment, and we know that the subsequent treatment is to add the finance cost and reduce the lease liability by any cash repayments. So on 2011 we have a opening balance of 2,26,800. This we just brought forward this lease liability number here, and we calculate 9% interest on this. You just apply 9% interest on this number, you get 20,412, and a repayment is made at the end of the first year. A repayment of 70,000 is made. So you just deduct this. So add the interest charge to this number and deduct 70,000 from this number, and you get a balance carry forward of 1,77,212. And the closing balance of the first year becomes the opening balance of the second year. So you just bring forward this amount and you just apply 9% interest on this number. You get 15,949. And again, you deduct the 70,000 payment made at the end of the second year, and you get the closing balance for the second year. But here, in the question, they have asked us to calculate the finance cost that should be recognized in the statement of P&L for December 31, 2012. And this is the right answer, because see, this is the lease liability at the beginning of the year, and we charge 9% interest on this, and this 15,949 should be debited to the statement of P&L for the year 31st December 2012. So the right answer is 15,949.08. The second question, on 1st January 2013, Rabbit acquires a new machine with an estimated useful life of 6 years under the following agreement. An initial payment of 13,760 will be payable immediately. So this 13,760 is an advance payment. So we know that lease liability is equal to present value of future lease payments. This 13,760 is not a future lease payment. It is paid immediately. So it is not a future obligation. So this 13,760 will not be a part of your lease liability. You will add this 13,760 while calculating the right of use asset. So this will be added to the lease liability while calculating the right of use asset. And 5 further annual payments of 20,000 will be due commencing from 1st January 2013. So this is a case where we pay at the beginning of each year. So this is a case of payment in advance. Since we are making the payment at the beginning of each year, this is a case of payment in advance. So we pay 20,000 at the beginning of each year for the lease term over the 6 years, over the lease term, that's 6 years. And the implicit rate is 8% here. The present value of lease payments excluding the initial payment is 86,240. So here this 86,240 is nothing but your lease liability, and this excludes this initial payment. As I already told you, this 13,760, it's not a part of your lease liability. That's why here they have given excluding the initial payment, and the lease liability is directly given in this question. So you just bring forward this number, lease liability, and since this is a case of advance payment, you deduct the payment first. The payment made at the on 1st January 2013 should be deducted, and the subtotal comes to 66,240. And you need to apply the 8% interest on this number, on this subtotal. You apply the 8% interest, and you get 5299. And add these two. Add the subtotal number and the interest number. You get balance carry forward, and the closing balance of 2013 becomes the opening balance of 2014. So just bring forward this number and do the same process. Deduct the payment made on 1st January 2014, and you get the subtotal. Apply 8% interest to this number. You get 4123, and add these two. You get the closing balance for the year ended 2014. And here the right option is the finance cost is 4123, because in the question they have asked what will be recorded in Rabbit's financial statement at 31st December 2014 in respect of lease liability. So they are asking for this year, this 2014, they're asking for this year. So during this period, the finance cost is 4123, and the non-current liability is 35,662. This is nothing. The difference between 55,662 minus this amount, this payment made on 1st January 2015. So the difference between 55,662 minus 20,000, you get 55,662 as your non-current liability. It is here, and your current liability is 20,000, which is paid on 1st January 2015. So the option A is the right answer. On 1st April 2017, PGN entered into a 5-year lease agreement for a machine with an estimated life of 7 years. So the estimated useful life of the asset is 7 years. So which of the following condition would require the machine to be depreciated over 7 years? So while talking about the subsequent measurement of right of use asset, we discussed that we should see whether the ownership of the right is transferred to the lessee at the end of the period or not. If ownership is transferred by the lessor to the lessee at the end of the lease term, then you should use the asset's estimated useful life for calculating the depreciation. If ownership of the asset is not transferred by the lessor to the lessee at the end of the lease term, then you should take two things into consideration. That is the asset's estimated useful life and the lease term. Whichever is lower, you should use that for depreciation calculation. But here they are asking which of the following condition would require the machine to be depreciated over 7 years. Here 7 years is nothing but the asset's estimated useful life. So in order to depreciate the right of use asset over the asset's estimated useful life, then the ownership of the asset should be transferred by the lessor to the lessee at the end of the lease payment. So transfer of ownership should be the condition. And option C says that ownership of the asset passes to PGN at the end of the lease period. So here in this case, option C is the right answer. On 1st October 2013, Fresco acquired an item of plant under a 5-year lease agreement. So the lease term is 5 years. The agreement had an implicit rate of 10%. The implicit rate is 10%, and the required annual rentals of 6 million to be paid on 30th September each year for 5 years. So we have to make a payment of 6 million at the end of each year, because it is given that 30th September each year. So at the end of each year, we have to pay this 6 million. So this is an example of payments in arrears. So the format is different from the format that we used in the second question. The format is same as the format that we used in the first question. The present value of the annual rental payments was 23 million. So here this 23 million is nothing but your lease liability. So in this case also they have directly given the lease liability. So you just bring forward this lease liability here and apply 10% interest to this, to the lease liability, and then deduct the repayments, because here the payments are made at the end of each year. So payments should be deducted after calculating the interest. So the sum of all these numbers will give you the balance, closing balance for the first year. You get 19.3 million, and the closing balance of 2014 becomes the opening balance of 2015. So just bring forward this amount, apply 10% interest on this, you get 1 lakh 93 and 4 zeros, and then deduct repayment of 6 million again, you get 15.23 million. But in the question, they are asking us to calculate what would be the current liability for the leased plant in Frisco's statement of financial position as at 30th September 2014. See, at the end of year 2014, we have a liability of 19.3 million. But at the end of year 2015, we have a liability of only 15.23 million. So during this period, during 14 to 15, your liability has been reduced. So it means that you have paid a portion of your liability. So the difference between these two numbers will be your current liability portion. That is, the difference between this 19.3 million and 15.23 million will come to 4.07 million, and that is the right answer. Option B is the right answer in this question.